Hey guys, next wrap up. Unfortunately, I lost 2 videos this week due to an iCloud mishap. They weren't uploading to my iCloud for some reason. I tried to fiddle with the settings and ended up losing 2 videos. So I had all of this mapped out, and now I have to just restart this from more or less the start of the week, unfortunately. So quite frustrating. However, let's just get straight to it. All right, so let's have a look at GA performance. Now, I capped a lid at the top here from this bar going onward because this was the first engulfing bar and reversal point, if you will. At this reversal point here where I've put on the 4-hour level and the line, we also came into 9050 right here, multiple times, as you can see, going across. But basically, start of the week, we had a test into the lower area, the 4-hour area from here. All I did here was extend that to the right-hand side. And I also plotted one at the base of this low from the doji candle and the green candle where these two bodies lie and brought this across. You can see the market has reacted. I'll talk you through this. But what we've seen on the Monday was a tap into 1.8900. We've seen a tap into 1.8900, and then the market completely accelerated on the Monday and took us all the way back into the highs, where we actually made a new high. We cleared previous areas, which was a blatant stop run, which over here on the right-hand side on the micro scale, this is more or less the result. We went from 8.9, okay, a spike into 8.9, into Asia. Then we went into London right here. London pushed the price up. We had a small pullback, the bullish engulfing in London. US opened and threw the price to the upside. So these 2 bars, 1 and then 2 on the hourly, we can see that on the 4-hour, we spiked all the way through. But look at the price action. Look at the price action on the hourly. Now, what happened here? We reacted from previous band, which was from this area, which I extended, and I've kept this one on. I've deleted the others from the previous week in this area of price. But we found support, we retested that area, and then the market threw itself back to the upside. So those who were holding shorts throughout Friday, okay, unfortunately, those holding positions, because it did look like a nice continuation could have been underway. So let me just quit VMware, holding my computer up a little bit there. And then we had the spike through. So those traders who were short didn't really have time, because of the velocity of this move over here, to maybe, I don't know, cover some of the short trades, take some trades off the table, because in two sessions flat, well, 3 including Asia, the price absolutely rallied through various lower swing high points, which we could see on the 15-minute, and we'll see this as we get into it. But we've also trapped traders long at this spike right here because of the velocity of the move. Many traders would have seen the US open and continue to pile in potential long trades right here. Okay, so this is a prime area right there. That area, as you can see, the market quickly respected it and pulled it down with the secondary bearish engulfing formation. That secondary bearish engulfing formation dragged the price below confluence 1 on the left-hand side here. Then we can see 1, 2, 3 spikes. These spikes are lower than each other. Prominent high, lower high, lower high, lower high. And then this is the result. Oh, whoops, sorry. Push that back. Okay, prominent high over here into the US session. US dragged it all the way back down. Now, on my last video, I had the expectation of this down move. Why? Because if we go into the 15-minute time frame, if I just clear this box right now, the stop hunt and the high, look at this, the 15-minute time frame, the 15-minute candle dragged us back down. Now we consolidated, and I did have this high mapped out across here, just with a standard trend line tool, with the high mapped out, We had a secondary low which was formed in that session of US, but the initial US low was just on the open. So we had the open, and this is the low here because I don't really class the overlap as a low. So the next low in the entirety of all of this price action right there was here where this doji lies. So what I'm going to do, I'm going to take the doji in the green candle and I'm going to bring it across. Now, if I bring this all the way across to the right hand side, because it was respected numerous times by GBP AUD, what we can see is that when the stop hunt run was made and we respected not only the 4-hour purple line, which I've just showed you, we also respected this area. Now this area, I took it from, come on, load. I took it from this point, which was, again, in a previous video, it was a London session high, which was respected, broken, respected here once more, respected again, and as you can see, price remained below over here. So it's a similar pattern. It's a very, very similar pattern as to what we've seen last week. On the overlap, we respected the high, respected the high, respected the high, dropped, made a low. Again, we stayed below that area. Now over here, even though we breached that area for the explanation I've just given, a stop hunt, and also to induce buyers to continue their long opportunities and pile in perhaps, we were whipped straight back down. Over here, this area, I drew this one across. And from there onward, as you can see, into Asia respected that by staying below it. US respected it towards the end of the session, end of the day, stayed below it. And then price decided it wanted to continue to sink. Asia brought the price down. We found minor support at the previous US low. On the overlap, we broke it. We respected it. If I just zoom right in there, 1, 2, 3, and then 4. Back below, respected again. Bearish engulfing brought that back below too. So we have a lower swing high right there. I did have this area drawn on, okay, because this isn't really the low. The low of London was here, okay, so you have to overlap, and this was the low right there, okay, across. So what I'm going to do, I'm going to go in and just show you. There's the London low, very, very thin London low, if that. I'm just going to bring this all the way over to the right-hand side, though, for a moment to see if we can see any further correlation. Now, upon the break in the London session, so we have the Asia breakdown, we have the London open spike through, we have a London secondary spike, and then we have the bearish engulfing bringing the price back down. And just before the session overlap, we have a test into that region. US opens, see all of these spikes here. These spikes are telling us that price may start to now reverse. We bumped to the upside. The bearish engulfing came off, and then we had this breakthrough. Now this breakthrough here, I did believe this was a trap move. Now let's correlate that with what we can see on the higher time frames. The higher time frame analysis is that in the midst of this breakdown in price through Asia, we see number one, bearish engulfing. So once we've seen that bearish engulfing come off the highs and as a fourth test, 1, 2, 3, and 4, price has been whipped down. That tells us that from here onward, so I need to go and plug my laptop in. Bear with me. Need a little bit of power here. Okay, so now what I can see is we use the macro to give us directional analysis. Even here, guys, where we see test 1, test 2 on the 4-hour closes, we can correlate that into the 15-minute time frame where we see various spikes into the high. Then on the breakthrough, look what we broke through. We broke through the liquidity band here. That band was broken. So that could have gave us a bias as to what directional force the market is going to push into next. And it was a bearish bias at that point. So remember, always check onto the left-hand side as to what clues we can get for the market direction. Now, from there onward, we broke through, we retested the band, and then the price was driven into these lows right there. And look at the perfection as it did. Boom. And what I'm going to do, I'm going to copy this and I'm going to paste it over to the right-hand side. Now things become a little bit more evident as to where the support was found. So the market in the US session pushed the price into that area, and then as you can see, look at this. Here we crept back above. Now, spike, consolidation. This is the consolidation area for the rest of the US. And we had one more forceful drive into it, which was this one here. Boom, there. And then as you can see, bullish engulfing brought the price back up. And then this was the move. This was the move in Asia. So that Asian high and the Asian low, we could plot that on. However, what I'm looking for is the next move. We had another spike into the area, which was here afterwards. So we had the bullish engulfing, which was this. Consolidation, consolidation, price spike into the low. Perfectly. Again, I did a transition from this area back into this one. London Open. If you check out London Open right there, then we had the spike into it here, which is this correlated move. And then GA has done what? What's GA then done? In the London session, we've had a little bit of mishap, and the band that I've drawn all the way from here has been respected. How is it being respected? It's being respected simply because on the overlap of London, we've had the forceful push down, then the small bullish engulfing candle, bringing it back to the upside. Market now, what we can do, we can look at these Asian highs and we can bring this band right across. And this is where the price is currently sitting. We also have the London highs across here. So we're more or less in some small consolidation area. With that being said, look at the band, the liquidity band on the 4 hourly, which we're all familiar of right now. Look at how prices ran back into that area. Spike 1, spike 2. So we know this area. I'm not going to copy and paste that one over. It can get a little messy. But with that being said, we know why this is using it as a resistance area. And look, it's also 1.9. So now, if I just go back, look at the US low. US low, let's bring the US low across and look at where it's reacting to perfectly. So now we have mapped out the GBP AUD move for more or less all of the week here. What I would also suggest is we're going to have lows that aren't the significant high and lows of the session, i.e. this one here. So I can just copy and paste that one. I can use that area and see this low over here, bring that one across. We can maybe use that as just some minor intraday support. Let's move this chair. And we can just keep track of that and just keep an eye on it, okay? Now, this high also correlates with this high over here in the US session. Okay, even if we were to just maybe use that one first, there we go. So look at this. The US session high, the tweezer top, the bearish engulfing formation, bringing that across, London respected that. No, sorry, Asia respected that. Then London is now respecting that as support where current price is right here, right now. Does that make sense? Hopefully it does. So what is next for GBP AUD, and what do I think is going to happen for the rest of the week perhaps? Now we have a current red candle forming on the 4 hourly. Let's look at the hourly time frame. Hourly time frame in the midst of everything I've just explained here. Look at this. So we have the hourly bump and run, stop hunt. The market has come back below. We've reacted many, many times on the hourly, but then the hourly gives us a bearish engulfing formation and pushes price lower. Price now at these levels, this is quite hard to read, especially as you can see a closure below the 4 hour band. But the market is then whipped back to the upside. Nice bullish engulfing on the 4 hour. We have a spike into the low there. And then here on the hourly, this is where we can pick up some clues as to where GBP AUD could now be going next. Okay, so spike into the H4 band, bullish, bearish engulfing, doji candle, indecisive at that area, right into 1.9 again. Nice psychological level as a confluence there too. In the midst of all of that, we also have many spikes and a lot of choppy price action on the intraday high and the intraday low right here. Spikes are now being thrown to the upside as the US opens 1, 2, 3, 4, and then 5. And in 10 minutes, we get the hourly closure, which is also a 3-pin pattern, 1, 2, and then 3. Okay, so 10 minutes until this 15-minute time frame closes. And now what I'm looking for is price to dump back into the lows. Could we potentially see if there are any Fibonacci moves in here? And you know, I haven't really used Fib too much, but let's go from the high into the low and then look what we have there. A 78.6 rejection, an extra confluence in all of what I've just explained. This has given us targets of 1.8891. So could GBP AUD now be in for, we had a bull run in the London session today. We've halted here and also on the band. We can read clearly the 15-minute prospectus and also the 4-hour prospectus here. And then what we can see is a potential for a down move on GA. So it's going to be interesting to see what US do with this pair today. So I'll catch back up on this one tomorrow. This is probably a better video actually, how I've explained it all from the last one, which I unfortunately lost due to iCloud. But yeah, I'm now looking for this nice closure here. This could give us a cause for short. Stops in this case just need to be above the highs right here. So we can use the highs and lows and recognize our patterns, recognize our levels in which the price halts for a nice key reversal back to the downside, 8930 perhaps number one. And then we can also consider the Fibonacci target as a nice swing point. So we could have swing 1 into swing 2, which could give us a nice, over 100 pips in this case, I believe. And then we can also keep an eye on our previous massive low, which I brought over from last week. So I hope that video explained a few things as the pattern and the cycles has continued to re-emerge and represent themselves going forward. Yeah, but so far so good. So here we have, again, US high, London high. US is now bringing the price back below the prior high, and we're looking for a little bit of a meltdown. So let's see how this one performs.